Welcome. It is 1 p.m. We just got the closing bell for March 19th. And today, this morning, we were talking about how the market was not likely to go anywhere, that we were probably going to drift. And if any direction, we'd probably drift higher. So that's exactly what happened. We had our S&P 500 open flat, chopped sideways, then drifted higher, went sideways again, and then went higher towards the close. And as you can see, it's probably almost a mirror image of what happened yesterday. Yesterday, we traded down a tiny bit and then went back up. Mostly that was sideways movement. And then we drifted down throughout the day with a sharp decline into the close. Well, today we got that sharp incline into the close. So basically the mirror image of yesterday and basically the same range of movement as yesterday as well. So our high was a little bit above this purple line and our low was a little above the purple line here. Our low was a little below the purple line and our high was similar to the high as yesterday, just a tiny bit higher since we got that surge up in at the end of the day. So really, we spent 2 days going nowhere, which was exactly what we expected going into the FOMC. We just got a tiny bit of volatility during the trading action over the last 2 days. Tomorrow, we'll expect that volatility to pick up as we get the announcement of whether or not we're going to cut rates, and then especially when Powell starts to speak. And that's really where we'll get a better idea of directional movement. So we have to remember, though, that the market tends, the first movement after the FOMC announcement tends to be wrong, meaning that if Powell says something and the market goes way up, usually the next day we go way down. And vice versa. If Powell says something and the market goes way down, usually the next day we tend to trade upwards. So we're not going to get excited either way, whichever way the market goes, because there's a tendency for the market to undo itself the following day. Now, the last couple of days may have been difficult in your portfolios because of the uncertainty. Really, we've just been chopping sideways. So your portfolio might be going up and down, making some money, losing money, making a bunch of money, losing a whole bunch of money. And then when we hit tomorrow, you may see another spike. And just know that you're probably going to get swung the other way the following days. So don't get too excited if your portfolio seems to have been very directional while the market has not been. Okay, so that's very normal while we're chopping around and we're waiting for these large announcements. Today, there's probably not going to be too much for us to analyze because, again, tomorrow we are going to be waiting for that FOMC. So there's not going to be a lot of action or not a lot of things for us to look at other than a few technicals here and there. Tomorrow morning is going to be pretty much the same. We're going to expect it to be pretty quiet until we finally get that FOMC announcement. So hopefully we got a chance to get neutral. I had difficulty getting neutral in some of my portfolios. We're just not going to get too excited because there is still opportunity. Even if we have to sit through the volatility of the FOMC announcement and a directional move after the FOMC announcement, there's still a pretty good chance that the next day we're going to reverse. So that still gives us plenty of time to move stuff around and position ourselves if we need to. So let's take a quick look on a daily basis at what happened. And see that we got a nice green bar over here. And that brought us comfortably above the EMA 8 out of the kind of danger zone over here and towards near the top of this box right here, but really we're still inside the box. That didn't help us move out of the box, which is not unexpected. We were really saying that if we were going to move outside of this box, it's most likely going to be after the FOMC announcement. So we are still below these all-time highs right here. We are creeping towards the upper edge of this box, but this lower trend line now is giving us some pressure because we're getting squeezed between the top of that box and this bottom that this lower trend line is creating. So it still does look like that maybe sometime this week, we will be forced to move one direction or the other. QQQ had a up day as well. We closed right near the EMA 8. So EMA 8 is at 438.44. We closed at 438.58. So we are a tiny bit above that EMA 8. And we have successfully bounced back above that EMA 20. For 2 days now, we are comfortably above that EMA 20. So the danger, the immediate danger of crossing below that trend line has now passed, but the FOMC could undo that. So even if it does, we're not going to get too excited because the MA50 is not too far below. And really, we're just trading again in this sideways box right here. The difference between the S&P 500 and the QQQ is that we're trading closer to the bottom of the box. So this level, as we were saying this morning, that low right here is going to be an important level. And if we break through there, we're going most likely straight to the MA50. It didn't happen today. We didn't expect it to happen today because really we're just waiting for that FOMC meeting. So really markets are behaving exactly as we expected. There's nothing weird, nothing unusual. Everything is operating normally for a market that is heading into that FOMC announcement. So we'll take a careful look at sectors after this. Let's move on to Dow Jones. Dow Jones is definitely trading sideways in this box. And we are kind of middle, sort of towards the upper half of this box, and we're just chopping sideways. We're nothing really exciting going on in the Dow Jones. However, it does give us a preview of what the SPY might do. So if I look at this and I draw a trend line from this bottom right here, it's a little less clean because we're so curved. We've showed you that curve before. Let me choose a slightly different bottom. Let's try this one right here. It might make it a little bit easier. There we go. Okay. So if I draw that, if that was the way that I drew my trend line, then the Dow Jones chopped sideways straight through that trend line. And that's looking a lot like what the S&P 500 might do. Chop sideways through the trend line. As you can tell, that just because I'm below the trend line doesn't necessarily mean that's something to get super excited about. But even with this sideways chop, we can break through a trend line, retest a trend line, come back down. So what this is telling us is we are officially not in an uptrend anymore in the Dow Jones, if this is the trend line that I'm drawing, and it is. Okay. So this low came down and touched that MA50. And that's what could happen with the QQQ. So again, just because we break below that trend line and just because we break below that EMA 20 in the S&P 500 or the QQQ, it doesn't necessarily mean disaster is happening. What it means is that we're consolidating. We moved up for a really long time since October of last year, and now we're consolidating and chopping sideways. I don't have to go up and then come down. I can go up and then go sideways. This consolidation, the longer it goes, the more likely it is I'll break the consolidation. But this has gone on in the Dow Jones for over a month now, a little over a month, and we're still consolidating. That MA50 still has not quite made its way up here, but it's getting there. If we go on like this for another week, it will probably be right there. And then it'll be a little bit more likely that we break out of that range. That MA50 may eventually join it, but that would be quite a long time for us to chop sideways. But to realign all of our sectors, it is possible that we just chop sideways for a really long time. We don't have to get a 5% or 10% correction or pullback. That's just more common more to get that 5% or 10% pullback. If we did that, then for sure we would correct the fragmentation within the sectors. Chopping sideways long enough does the same thing. And if we're in a really strong market, then we'll simply chop sideways. So one thing that might help us and might keep us in a, at least visually, a very strong market is if the US dollar keeps on weakening. So we'll take a look at the dollar in just a moment, and we'll take a look at bonds in just a moment. But this Dow Jones gives us a good picture of what might be developing for QQQ and the SPY. Just because we break below this trend line doesn't mean that we're going to come down significantly. So that doesn't mean that we're suddenly going to be short or point all of our portfolio short. What it will mean, though, is that we'll take a much more balanced approach, and we will have to be much more careful about picking our stocks. So when you go sideways in a sideways market, you have to be really good at picking your stocks and picking your directions, because for the most part, most of the stocks are going to be chopping sideways as well. So you go into a position and you just get chopped sideways. And if you're investing in options, sideways movement just means time value erosion. So you're just slowly losing money every single day because you're never getting a large directional move for you to make a profit. So the stock picking becomes extremely, extremely important. And we're going to have to spend some time being very careful about how we choose, or the positions that we choose. So given that, yeah, QQQ is just ahead of the S&P in terms of reaching the point where the Dow Jones is, but it's looking kind of like that might happen. So when we say we get squeezed here and we'll be forced to choose a direction, that direction could be below the trend line, but sideways choppy movement. And then really in the Dow Jones, that this box is now what we're paying attention to. We are no longer paying attention to this purple line over here, this purple uptrend line. So what we want to see is a significant break above or below this box. Doesn't look like we're going to get it in the next week or so, unless the FOMC really sends us moving in one direction or the other. It's more likely to send the QQQ, the speculative stocks, the consumer discretionary retail, the tech stocks, the ones that are interest rate sensitive, like home builders. Those are the ones that are most likely going to be affected by the FOMC announcement. That's not really the sectors that we see too much in the Dow Jones. So chances are Dow Jones is just going to keep on chopping sideways. QQQ, we could continue chopping sideways, but there is potential for the FOMC to send us in one direction. The higher potential direction is probably down, given that we're close to the bottom of this box. And if we say higher rates for longer, that's more pressure on tech stocks. That's more pressure on stocks that compete with the yield of treasuries. The treasury, so they compete with interest rates and treasury yields. So there's more pressure on those stocks. And there's more pressure on stocks that are required to borrow money in order to sustain themselves. So a lot of tech stocks are highly speculative. They borrow money or they raise money. They are not quite profitable yet, and they're dependent on borrowing in order to stay alive and continue operating until the day that they actually become profitable. So QQQ gets hit double whammy because it's competing for yield and it's getting charged interest rates. Other fields might also be, for example, biotech. They do a lot of speculation and a lot of borrowing, and small cap stocks as well. So let's take a look at IWM. IWM comfortably below this top pink line right here. It did have a nice recovery day, so we're still near that EMA 20, but we are caught sort of in no man's land between the MA 50 and the EMA 20. And it's starting to look a little bit like we might start chopping, but we could remain directional either between these two pink lines, or if it gets exceptionally weak, if we do get rates higher for longer, we may come and challenge this MA50 and come below it. But I'm not really, wouldn't be too concerned of moving down below this lower pink line. So small cap stocks are telling us not yet. We're not ready. We're not quite ready for a bull market yet, a full true bull market. We might be okay in terms of an uptrend. It's not telling us anything about that, but it is signaling that we're not ready for a bull market. And given how long this has developed and that we were able to move up right here, and it looks like we're going to go sideways in the other indices and potentially downwards, or maybe have that pullback or correction, then what seems a little bit more likely now is that we're not going to get a strong or true bull market until after the election. So if we haven't hit it by now, then most likely, because there's not enough time. If we start, for example, in May, and then we say, hey, we're in a bull market. Well, no bull market only lasts, what would that be, about 4 or 5 months. That's not enough time before the election cycle for us to complete that bull market. So at best, we probably just get an uptrend before the election cycle, which seems a little unlikely. Also, if anything, we might start a rally or a new uptrend a couple of weeks or a month before the election, and that would have some predictive value. So that would be the market starting to price in or predict whether the Republican Party or the Democratic Party wins the election. But we're too early for that right now. So it does kind of make sense for us to flatten out and go sideways or pull back heading into the election now. So I'm not going to expect an extreme amount of bullishness in this market anymore. I'm not going to expect this uptrend to continue until we get closer to the election. So we may chop sideways for quite a while, or we may move downwards. This is getting a little bit predictive. So of course, we're talking in probabilities over here, and the probabilities are never going to be super high. We're not going to be able to say this with 80, 90% confidence. So we're talking like 60, 65% confidence right now. But that's just what the market, how it's developing. And that's how we're seeing things. Now, tomorrow, the FOMC could change the picture completely. And if we get sent upwards, for example, if they just cut tomorrow out of the blue, after they've been saying, oh, no, it's not going to be later, we want to see more data, we want to make sure inflation's coming down. And after all the CPI and PPI numbers, just last week just showed us that that inflation is going up, and suddenly they go, oh, okay, we'll cut. That would be extremely unexpected, extremely against their narrative, extremely against their goals, but extremely positive for all of the stocks that have to compete against interest rates or have to pay interest rates. And that would send this market higher, flying higher. And then everything that I just said in the last 5 or so minutes, 10 minutes, would be completely invalidated. But we're not really anticipating that they're going to cut rates tomorrow. A lot will depend on the exact language that Powell puts out. And there are AI algorithms that analyze his speech as he says things real time. And there will be supercomputers trading that. And so you will see a lot of volatility when he is speaking. You'll see that S&P 500 and all the other stocks move up and move down and move up and move down as he says different things and as those algorithms start to compete with each other in picking a direction. So what did we say? We said the dollar and the TLT that we wanted to look at. DXY busted through this downtrend, this latest downtrend. That's interesting. So we have a, well, we don't know yet because we have this might be a high. If it is a high, it's not higher than that high. So we still need to wait. Yes, we broke this trend line, but we cannot say whether we've starting to develop a new trend. We can't say this is the beginning of a new uptrend. It could just be chopping sideways. We could just drift here and there. We don't know, but the likely movement is probably a little, this weakness, we have to ask ourselves, is it because it's weakness in the US, or is it because the other nations, other currencies were strong versus the US? And then this recovery right here, is it because the US is becoming stronger, or is it because other nations' currencies are becoming weaker? And I have a feeling that it's the former, or the latter, actually. So if we look at FXI, second largest economy in the world, that's been doing poorly. It's been in the straight downtrend for quite a while. And here we looks like we bounced off of that MA 150 and starting to come back down. So it just may be a reaction over here to about 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. So it could be a reaction to China. Right? We're just getting a little bit strong relative to China right now. But we need more days to confirm and to figure that out. So inconclusive from the dollar, TLT, a little bit of bounce near that horizontal line right here, happens to coincide with the MA 150 right here, but that's not a level that we look at on the TLT. Not surprising to go flat into the FOMC meeting. Obviously, there's a direct impact on treasuries when there is an interest rate decision by the FOMC. So it's weird. This could be set very directionally as well in terms of what Powell starts to say. So this is something we'll also have to keep an eye on tomorrow. Okay. So our picture is starting to develop or start to change a little bit. The Dow Jones is giving us a clue as to what the future for the S&P 500 and QQQ might look like. We are starting to trade in these sideways ranges and boxes, and our directional trades in our portfolios have not been doing quite as well as we experienced earlier in the last couple of months, where you would buy something and it could pop in a couple of days and you could make a very nice quick profit. Now it's like random. We're getting a lot of random movements we expect it to move in one direction, it goes in the opposite direction, then we recover the opposite direction. It's like, oh, well, this should be good news for it, and it goes down, and this should be bad news for it, and it goes up. We're getting a lot of decoupling and decorrelation between some price movements and news, price movements and technicals. So it's becoming a little bit more difficult because of this sideways trading. And that's a sign that we should start to reevaluate our positions in our portfolios and reevaluate the strategies that we emphasize within our portfolios. So I'm going to be doing exactly that, and I recommend that you guys do as well. But again, the FOMC is going to be the key determining factor of how we start to look at the markets going forward, whether or not we get that rate cut, and more importantly, how Powell presents himself, the decision, and their plans going forward. So that's about all we can talk about before the FOMC meeting. Everything else would just be pure speculation or actually completely irrelevant, because the FOMC announcement is going to trump everything. That starts at 11:30. You'll start to see a volatility pick up maybe 10 or 10:30 tomorrow, and then really pick up at the 11 o'clock mark, and then really go wild at 2:30 and onward. So unless you have a good way of trading that volatility, my recommendation is just get as flat as you can before 10 o'clock, and then just watch everything. Pop some popcorn, go do something else better with your time, and come back and see how everything plays out. And then we can start to position ourselves after the market close tomorrow. Okay, guys, have a wonderful day, and we'll see how tomorrow develops.